welcome to our latest Travolution COVID-19 webcast. I'm delighted to be joined today by Carolyn Corda, who's the CMO of travel data cooperative ADARA. Welcome, Carolyn. I hope you're well.
Very well, Lee. Hope you're well too
Yeah,
in these difficult, unprecedented times.
It certainly is. Yeah, and we're speaking across the pond. So you're in the US, I'm in the UK. So if there are any issues with the screen freezing, that's down to Wi-Fi issues, but hopefully we'll be fine for the next half an hour or so. But let's just kick off. I know obviously ADARA, you have lots of data in your business. It's all about data, and you've created a special tracker to help companies at the moment, who are trying to deal with this huge crisis. But just some broad brush view on what the data is currently telling you. I mean, currently, obviously, we're not even traveling at all, but you are able to see a few trends that might be of interest. So just some of those broader trends, and there's people who are interested, that they can go in and look at it in more detail. What are we seeing at the minute, Carolyn?
Sure. So, first, as I think about the data, I always start from the position of information is power. Data matters now more than ever. We're in such uncertain, challenging times that, when I talk to my clients, it's hard to get a handle on what's going on. And in many cases, the standard data that they've been using, what's been feeding their demand forecast, the way they're typically looking at the market just isn't serving them in this situation where, you look at capacity, airlines, hotels, many are down 70, 80, 90% compared to last year. So in many ways, part of what we're doing is saying, okay, the year-over-year comparisons is actually obscuring to a certain extent what's going on. Let's dive in a little bit deeper. And you're right, Lee, with ADARA, we're very, we're honored that we can be helping the industry. We do see booking trends on a daily basis, booking volume, search volume. And what we're doing is working to tease the different trends apart so we can understand and drill down into what's going on. Because if you look at the high level aggregate trends that we tend to look at week by week, you're going to miss those important signals that are buried in that higher level view. And here's an example. So we track flight and hotel booking on a daily basis, and it's posted on our website. And I took a quick peek today before I hopped on the phone with you. And if I look at the aggregate trends for airlines or hotels, it's relatively flat. And we've been flatlining through most of March into April. And maybe we're using an index, so we're bumping around maybe around 20% of what it was at the beginning of the year. But if you dig it deeper to get a better understanding of what's going on, I think of it like the lens you use on a camera. Are you going to use a wide angle lens or really zoom in? Wide angle, you'll get more of the landscape. But in this case, I think you really want to use a zoom lens to get into the detail. So that example of looking at volume, it wasn't very interesting, just bouncing along. I can see there's a bit more volatility with air booking. So great, let me look at air booking. And we look at trip purpose. So that's the next filter that we're applying. And I can toggle between business and leisure. And okay, I can see there's more going on in leisure. And then I take a look at the booking window. We take a look at the advanced booking window. Is a trip plan for 0 to 15 days out, 15 to 30, 30 to 60. And in this case, I can see, okay, wow, the bookings 91 days out. We're in April. People are beginning to book in July, August, and beyond. That part has doubled. The index has gone from 20 to 40 over the last few days. And so that dreary line that I was looking at for all of bookings that was flatlined was obscuring what was truly a valuable indicator of real consumer demand for a really specific segment of the market. In this case, it was air bookings and leisure, advanced bookings for July and beyond. So that's why I say in this situation, it's not so much, you don't want the zoom lens, you don't want the landscape, or you don't want the wide angle lens, you don't want the landscape, you want the zoom lens. You're going to miss important indicators. Yeah. So we're looking at each region, EMEA, APAC in the US, and just at a high level, we saw some rebound. I can talk a little bit more about it, how we think about that as a pattern for pent-up demand. We saw some rebound in APAC as COVID declined. US, we're seeing people booking 91 days out. The trend in Europe, I hear from suppliers that they believe there'll be more bookings or more people traveling in July, August, and beyond. Those aren't yet quite visible in our data sets.
Yeah. Yeah, I mean, I think you've said in a piece for us on Travolution, a lot of this is driven by airlines putting future travel periods on sale, trying to, they're deferring bookings and moving them into 2021 and beyond. So you're seeing good figures. And obviously you're seeing things from different markets' points of view. I think clearly people are looking at China or Japan or places in the Far East where maybe they're beyond or they're further along the sort of the current coronavirus track to see what recovery looks like. Are you seeing positive signs from those markets or some indication of how the industry bounces back?
Yeah, so early March to late March, you can track and you can see COVID infection rate going down and the booking rate going up. And so if we just focus on those periods, because we looked at China and South Korea, it was really evident in those two markets that you could see the impact of the improving situation around the pandemic and the interest in people not just traveling within China or within South Korea, but foreigners traveling into those specific countries. And so we looked at inbound travel to both of those countries. And it's really a slightly different pattern, but really clear that the time period early through late March, we saw in China, searches rebounded to about double what they'd been in the previous month. So if you compared February when things were quite difficult with the coronavirus to March, bookings were increasing on average about 25% over the same period. So from a relatively low base, but still a significant increase in terms of real commitments, bookings, people planning on traveling.
Yeah.
All that changed towards the last few days of March. There's concerns over a resurgence of COVID, and China imposed very strict rules on who could enter the country, even requiring quarantines for returning citizens. Similar pattern in South Korea. And here we were also looking at searches. Those increased, and for that same period, early to late March, those went up by about a third. And then again, the concerns over a resurgence of the infection rate. South Korea, they banned visitors from 88 countries to reduce the resurgence. And not surprisingly, the search activity went back down. Now, interestingly, it never goes down to zero. And I think you and I have talked about pent-up demand and the human desire to get out and travel. And some of that may be armchair traveler or traveling or just checking to see what the fares and what the hotel rates are. But I think it's interesting that it's I've seen it get down as low as 5% compared to earlier in the year, but never completely stop.
Yeah. So obviously in the EMEA region and the US, really, we're still in officially lockdown, although there's obviously moves to try to find a way out of this and these restrictions. We're still not there, so there's not really any traveling going on at all. There's no actual bookings being made. But are you able to see, I suppose you could still track intent within that data and just to sort of see people's desire to travel. And you mentioned pent-up demand. You can probably see it in the data, can you? That it's sort of there still, and people are just ready and waiting to come back into the market.
Yes, absolutely, and in slightly different ways. In the U.S., and this is visible on our own website. The charts are there if you click through to the travel trend tracker. But you can see we call them micro spikes. And people tend to, there's a cycle in terms of when people are shopping and booking, and that tends to happen during the week, less so on the weekends. And even though we're all in lockdown and every day kind of seems the same, you're still seeing that Monday through Friday activity. And, we've seen, and we break it down by leisure travelers, families, and families versus solo and couple travelers. And in both groups, you see these every week for the last 3 weeks. A peak is formed, a micro spike for 91 days out. And we can see that some of the destinations are changing, but these are actual bookings. And so people are committing their funds. Most of the airlines are allowing you to change without penalty, but there's not a refund back to your credit card, for example, if you totally change your mind. And so I view that as a genuine commitment in terms of traveling in July, August, and beyond. The pattern for Europe is a little bit different. I think it reflects different modes of travel, train travel being more prevalent, for example. People might be more comfortable being on trains versus on an airplane in the near future. But if we do some year-over-year comparisons, we see a similar pattern that people are making commitments and planning to travel. They're searching for travel for August, late July, August, and the year-over-year comparisons, particularly as you get into August, are showing a rebound compared to earlier in the year. Yeah. So I think that there is a innate human desire to travel. People want to connect with friends and family. People want to explore, and you see that in the results and the volumes that we're seeing. And I'm a big fan of Daniel Kahneman. He was he won the Economics Nobel Prize 20 years or so ago, but he's still very active as a cognitive psychologist. And he's done a lot of research in terms of how people think about memories and how people think about experience. And he's made the claim that we usually choose the next vacation not as an experience, but as a future memory, meaning that as we're planning our vacation, we're already imagining the stories we're going to be telling about it. And that planning and imagining vacation are really enjoyable activities. And I think, in a lockdown where, we can still continue to dream about where we're going, I think that's as long as people are being responsible, it's great that they're continuing to search and book travel.
Yeah, and we're seeing a lot of marketing activity appealing to that just sense of dreaming, and we know we can't book, but you can still think about it, and we're coming back eventually to allow you to book. A lot of companies at the moment will be pretty much in hibernation. They've furloughed a lot of staff. They've reduced their costs to as much as possible to zero, and are just sort of hunkering down, survive this period, and waiting to emerge again. But what can they do in this period when they're not really taking bookings? What can they do in terms of using data, in this period? Because they've probably got, in some respects, if they've got staff still on the payroll, they've got time on their hands to look at their data, to think about what they do with it. What's your best bit of advice for them in this period?
I think there's two opportunities, and I see my clients following two paths simultaneously. They're not mutually exclusive, or it's not a one or the other situation. And I think, as you've stated, there will be a rebound. It's inevitable. It's likely to be fragmented. It's likely to be something that you've got to keep an eye on and discover. It's not going to be monolithic and obvious, as we've seen in past situations where it's more of a financial reason people weren't traveling. You can see as economy improves and people get back to traveling. And so, one track that folks are on that I think is really important is thinking about the timing. They're building dashboards with data in it in terms of economic data, information that you can gather publicly in terms of the epidemiology, the infection rates, along with some of what you can track publicly in terms of consumer sentiment and the data. And all of that is designed to help these companies get the timing right, because getting back in the market, being more visible, more actively marketing, timing is going to be critical to success. And that getting the timing right requires data, tracking the trends, detecting those early signs of a turnaround, what we're calling the inflection point. I mentioned we've got free data, our travel trend tracker. There's other sources as well. Everyone in the industry wants to make sure they're tracking demand, because they don't want to miss that one segment that's beginning to rebound. And I think of it as kind of a Goldilocks situation. You've got to get it just right. If you're too early, you burn up those valuable cash reserves you've been keeping close hold on. You burn them up by chasing demand that hasn't really developed yet. If you're too late, your competitors win over your customers. So you've got to time it just right. And getting it just right requires data. As I say, folks are building dashboards from lots of different sources.
I suppose it's a good time to sort of audit your data and audit your sources of data, so that you're always going to use multiple sources, but make sure that they all work together. They're not sort of competing or they're not overlapping, but they are bringing some added information and insight to you, so that when you're getting the right results out of it, not getting false results out of it.
That's exactly right, and that's the second track that people are doing, and it's that what can you do with your data that you didn't have time to do in the past, because you're running so fast, running so hard. The last 7-8 years in our industry have been so such a period of growth that so the other thing that people are doing, so it's the dashboards and really keenly tracking that inflection point, that beginning at which markets are turning around. And you're right, the other thing they're doing is they're testing data. You don't need to be active in the market. You can go do back tests. You can see how previous promotions performed. Take data that if you had it, how would those have performed? Get a sense for, are there new data sources you should be using? As you're saying, have you done good hygiene on your data? Are there overlaps? Are there segments that you've got distorted because you're using multiple data sets, so you don't have them synchronized properly? So I agree wholeheartedly that the other thing people are doing, that second track, is getting their data house in order. Some of it being hygiene, a lot of it being testing, the back testing. Tools exist to help with decision engines and all that help you be able to take a look at how past activities have performed and how you might be able to improve them. And even putting in a better platform for doing that testing and what-if analysis is another opportunity. The technology has certainly come down in price over the last 5-10 years for that sort of capability. And recognizing we may not be able to invest in technology, but we've got, as you said, more people. Not everybody's been furloughed, and so a great activity for those people to be working on is some of this ability to improve getting into the market fast, making sure you've got messages. We're not sure. We think of it as scenarios. Are we going to be in scenario A, which is maybe a more rapid return, B, less rapid, more drawn out? And so having those scenarios built for how you're going to react to each of those scenarios is an important element as well.
Yeah, and it looks almost certain that any recovery is going to be very difficult to predict. It's patchy. It's going to maybe kick off in one place and then have to come back if a flare up in the epidemic happens again. Different markets are going to go at different speeds. It's going to be really complicated. You think, once we start to sort of move out of this for a period. So companies are going to have to be very flexible and agile in the way they view the market, understand it, and react to it.
Yeah, we're seeing it the exact same way. As you say, it's patchy, it's fragmented. In the past, we've had, it might be, the origin market, there's things going on from travelers that normally come from the Northeast in the US or from, certain countries in Europe. And so you say, okay, we're not going to be seeing people coming from those regions. But now it's both the origin and the destination. And so it just increases the complexity in terms of trying to understand what's going on. And as you say, one market might be open for a little bit. This is some of the spikes we saw in the US. It was in March, the airlines, US airlines reduced the penalties for changing flights. And the number of bookings shot up 200%. Just in a couple of days, it had been quite low, and people responded to that. And one of the most popular places, and not surprisingly, people are planning summer vacation holidays, was to Orlando, Universal Studios, Disney World, etc. But as the date gets closer, and if those the theme parks aren't open yet, or they're still sorting out how to how to respond, you know, those people are going to travel elsewhere, make different plans. And so you're exactly right that it's not going to open and stay open. There could be relapses, as we're talking about certain countries in APAC, that, you know, you'll see a rush of bookings and then things can change depending on the infection rate.
Yeah.
And public policy.
When we, as we were talking before we started this, you used the analogy of sailing to describe how you think things might be like. So just explain what you mean by that.
Sure, and it sounds like you're familiar with sailing as well, but there's a couple elements to it. One is, and I sail on smaller boats, and so I've got my hand on the tiller, and you're watching the sail, and you've got telltales, those little strips of fabric up against the sail, and it tells you if you're catching the maximum bit of wind that you can based on, you know, how you've set your course. Now you're trying to get across the bay or, you know, to some point, and so you've got a course set. But it's those last minute, you know, in real time adjustments based on, you know, that puff of wind that you're trying to capture. So setting the right course to get all the available demand, you know, just like the wind might be light and puffy, you're trying to get all the available demand by how you set your course. And you were saying that, you know, if things change again, if there's a change in public policy, a change in the infection rate, being able to attack quickly, being prepared to switch course and take a different tack. And then I was also reminded, you know, this idea of too early or too late. When you're racing, if you go over the start line in advance, you've got to come back and take another circle before you can start. And so now you're way behind. So that same sort of thing, if you've lost your advantage, if you're late and the folks you're racing against get across the line ahead of you, then it takes forever to catch up. So it's that same thing that starting at the right time as the market opens is really critical as well.
Yeah. Yeah, we've spoken quite a lot about, I guess, how travel companies can position themselves to make the most of the inevitable turnaround that we hope will happen. Are there any other areas that the travel companies should look at in terms of their data that can make sure they are really primed and ready to go as soon as it's possible?
Sure. I think, you know, as we've been talking, having programs preloaded, you know, what sort of offers are going to be most attractive? Is it going to be, you know, people are still going to want flexibility. They'll be uncertain of their plans, and so the idea that they can switch their plans might be attractive. Some, you know, might want discounts, or some might want discounts on some of the upgrades. And so, part of what I'm looking at is I'm thinking about different recoveries that I've been through over my career. And there was one where I very much remember that as the fares and hotel rates, tour rates dropped, people that had never traveled before came into the market. And you know, they're you know, we're parts of the industry are very accustomed to dealing with people that are seasoned travelers. You know, they know how to navigate an airport. They know, you know, how to navigate a seating chart on an airplane. They know how to find their room. You know, the routine of travel is very familiar to them. I'm keeping an eye on it to see how it develops. But it may be that we get a lot of people that simply haven't traveled before, and so something that reassures them of, you know, hey, we're looking forward to seeing you. Your trip is in a few days. Here's what you can expect. You know, if it's a hotel, an airline, or a tour, saying, hey, we've got it all sorted out for you. And tour companies, I think, do a good job of this. And travel agents, this is part and parcel of their job to detect when somebody might need a little bit more help. But I've got my antenna up, my radar up for, are we going to see people that are novice travelers coming in? Because how we want to message to them should be a little bit different. I think for some suppliers, they're seeing this as an opportunity to reestablish more direct connections with their travelers. I think intermediaries will continue to play a role, but I think there's recognition that previous downturns, a lot of suppliers really relied on OTAs to pick up some of the inventory. And is there a different, you know, we're looking at, are there different models? Travel suppliers are looking today to say, are there different models to manage the transition from low demand to higher demand, with less reliance on OTAs? So I think I think it's having your antenna up, being alert for some of these changes. I think it'll be different in ways we cannot anticipate.
Yeah, yeah. We're hearing lots about, possibly, trust is going to be big for many reasons, because people are going to be slightly requiring reassurance about just the safety of travel. But obviously, many companies are struggling with refunds and all that stuff at the minute. So there's a lot of trust that needs to be rebuilt, and it's brands that people can trust, that whether they're direct or whether they're an intermediary, that people will maybe flock to. Do you think there's something in that there will be a rebuilding of trust period for travel?
Yeah, I think that trust is maybe the highest level, or the most fundamental element. And so if there are things that travel companies feel like they need to, well, I think that reassuring people in terms of the health safety of whatever environment you're providing for them will be critical. It may be that certain authorities emerge as certification, or there'll be certain processes, some sort of seal of approval that lets people know that the environment they're in has met certain standards. I think we'll see that. I think for brands, I think there's an element of trust. I also think that many people who had really strong brand affiliations now will not have been traveling for 3, 4, or more months. And so it seems reasonable to expect that some of those, that strong brand affinity will have weakened over that period of time. And so in some ways, I think that some of the more loyal travelers might actually be up for grabs. And it's an opportunity for, if you think you've only been seeing somebody 2 or 3 times a year and they're traveling 15, 20 times a year, it's an opportunity to find ways to strengthen your connection with them as competing brands attempt to do the same. And so really understanding their motivations and what makes them feel connected to a brand, I think will be very important. I love some of the messaging coming out from the destination marketing organizations about, stay safe. When we're ready to travel, we're here for you. DoubleTree Hotels, which is kind of famous for its chocolate chip cookies, made its recipe that they've guarded for decades available so that people could enjoy their chocolate chip cookies in their own home. I've seen some photos of people baking them. Clearly, it's not just about the recipe. There's some processes you got to get right. But I think the way that some brands have shared a bit of themselves with travelers during this period is going to serve them well.
Yeah. There's one probably a very good theory that the recovery will start domestically in travel. So people will, initially be reticent about getting back on a long haul flight. So the first signs of a recovery will come from people going closer to home, and so it'll be a sort of accommodation, hospitality-led recovery. And then maybe later on, people will start doing short haul and long haul. Do you buy into that theory? I mean, I suppose in the States, the market's different there. People are used to actually holidaying within the country of the US. In the UK and Europe, it's easy to sort of cross boundaries. But do you think broadly that's what we're going to see, that we're going to see a kind of domestic travel-led recovery?
I think that makes sense. I think, the idea of the human sense of, what's my comfort zone, what's familiar. So, we do think about it as a drive market or a close market being the first to recover. And the idea that that's leisure focused. With China, it was interesting. A lot of what we were seeing was business travel. So people, eager to travel for business. There's some suggestion, well, maybe that's supply chain in terms of what's available to supply the hotels in China. Early, what I see in the data today suggests leisure will go first. And we're now looking at the concentric rings around where somebody lives and trying to test the hypothesis that it's the drive market or the shorter haul. I think that makes sense, intuitively in terms of, how humans are going to feel comfortable. I think it'll be interesting as we get to international travel and whether we end up with what I think of as bilateral agreements. I think, first international flights are more likely to be between US and the UK than between some other countries. I think Australia and Singapore, those, they might have a bilateral agreement and I saw between New Zealand and Australia. So I think in terms of how longer haul flights begin to come back on track, from a health perspective and from a public policy, government health requirement perspective in terms of which flights and who can come into the country, I think the international will have some interesting and again kind of hard to predict changes as people begin to travel internationally. But I think I will say some of what we're seeing for the U.S. For the 91 plus days out, Honolulu was a big destination, and the idea that it's considered here in the U.S. Less affected by the disease, being an island and harder to get to. It was interesting to see that was one of the more popular sites, bumping out Orlando, for example, where people want to go in July, August, and beyond. So that that's a little bit counter to the closer to home argument, but weighing in the factor that it's considered I think people consider it from a health perspective one that's relatively safe.
Yeah. Do you think the impact on business travel will be as long term as some people are predicting, with us sort of starting to realise that we can work from home, we can do business without having to travel?
Yeah, I think that'll be an element. I also think I've seen corporations be more restrictive in terms of traveling compared to government policy. So, particularly I saw companies, the tech companies were quicker to shut down and restrict travel compared to what the public policy health restrictions were in terms of traveling and stay at home. And so I think from the standpoint of perhaps some of the larger corporations with really sophisticated travel management capabilities, there might be some concern about the liability of, okay, we're sending somebody to travel in this place that we're not sure is really safe from a health perspective. So I think that unmanaged travel, people who really business requires them to be face-to-face with their client, to the extent clients are willing to have those conversations, I wouldn't be surprised if they're back on stream faster compared to larger corporations.
Yeah. Well, our time's nearly up, so we will start to wrap it up. Just one final question, I guess. I mean, you mentioned previous catastrophes that travel's gone through. There's been a number of them, and you've been in the industry a long time and seen them in your various roles prior to ADARA. Where do you place this one in the scale of things? Is it beyond anything you've seen before?
Yeah, absolutely, unquestionably. I've heard some folks, and they've got the charts to suggest it's 7 times worse than 9/11, which is obviously pretty dramatic here in the U.S. I think the global financial crisis, 08, is another one to compare it to. Wars and other diseases have been more contained, not quite as worldwide. And so I think the fact that this was worldwide, the fact that travel was one of the vectors that complicated, is part of the disease pattern, or one element of the disease pattern. The economic impact suggests, and I agree with the folks who are looking at it from that perspective, that it's going to be different in terms of how we recover, and it's going to be a longer period, given what we're facing.
And do you think a new almost like a new type of travel sector emerges from this? There'll be significant fundamental long-term change.
Yeah, I'm not quite sure what that will be. I think I look at some industries that are really dependent on density. I think of it as a challenge of density, and whether it's because it's what humans crave and desire, casinos, the entertainment venues, the poolside activities, the bars are all designed for that excitement of the crowd. I was talking to somebody and I've known for a while, it's an executive in the casinos, And I'm trying to imagine what it looks like to be getting it at the craps table when everybody's being kept apart. And that's, you know, that idea of separation is counter to, you know, what people are going there for. So either because it's part of the excitement of the experience, like casinos, or it's part of the business model, like airlines, it's hard to imagine, or I think the part that's going to change the most will be, you know, assuming that, you know, knock on wood, we have a vaccine and things can go faster, but until that time, the idea of, you know, how do we manage density for some of those industries that either depend on it as a business model or depend on it as part of the attraction itself, I think it's going to be where we see the biggest changes.
Good stuff. Well, look, Carolyn, thanks for your time today. Thanks for joining us, and we hope for the best for the industry.
Thank you.
Of course, and we hope the best for you guys over at ADARA, and we'll no doubt see you probably physically, hopefully at some point in the not too distant future. So thanks very much for that.
I look forward to it.